Hey everybody, welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. It is Thursday, the 8th of March, 2018. Hope everybody had a great trading day yesterday. We are coming at you at about 6:35 in the morning Central Time, so about an hour, or about almost an hour and a half before the market's open by the time we get this thing up and rolling. So let's go ahead and do what we do each and every day, taking a look at some potential opportunities in the futures markets. For those of you that are new to the channel, we look at the same markets every day, and the most important thing is we leave the lines on the charts to maintain accountability. So let's dive right in. So yesterday on the S&P, we'd had that very strong gap down, and then we traded higher, and my fear was that we would get to this gap fill and we would drift a bit lower. And that's actually what we got on the very small time frame. If you remember, the rules on when price approaches an area is to get out at the next opposing fair price value area. So our fair price area, when price got here, the next opposing one was down here, or possibly even right there. So there was this was a small intraday trade opportunity. And I'm not saying you're going to close out of the entire position at that level. Maybe you take some of your stops, some of your position off the table, move your stop to break even. Maybe you take it all off the table. It really depends on your own risk tolerances and how you do. But that trade should have worked out for a nice little profit for you coming off of that gap fill area. So what do we have today? Well, today we are looking at a potential breakout scenario, and that breakout scenario that we have in the S&P, we have just popped up above this region right here, which could serve as a breakout. And the reason that we look at it as a breakout is because it hit once, it hit twice, it had based up there a few times. You may want to get long on a pullback after it has a little bit of a rally higher. But right now, that's kind of what we're looking at. Now, I will tell you, I literally just tweeted this to a friend of mine. We were kind of talking back and forth. We're up, and he said, "No, I'm not long enough." But we're up. But the question is, what kind of volume are we going to be up on? I want to see, for this thing to really get some legs behind it, we've got to be up with some fairly substantial volume. And being up with some fairly substantial volume would really tell me that there's some follow through. Every one of these rallies that we've had has been on fairly anemic volume, and when you're rallying on fairly anemic volume, there's really nowhere to go, right? So just keep that in mind. We are still going to be looking for quality opportunities, both longs and shorts, as price comes into those areas and those regions. We may want to, just because we are in a basing scenario, look at this area here for potential reversal today. If we do get all the way up to this 2746 area, which doesn't certainly seem out of the realm of possibility. Looking at the NQ, same thing on the NQ. If I go to a smaller time frame, you'll see that our level hit, price came down, went to the opposing fair price value area, and then boom, has rallied right through that area. Now, the difference in the Nasdaq versus the S&P is that the Nasdaq has broken through this area up here, which has not happened yet in the S&P. So the Nasdaq is showing some relative strength to the S&P. So that's in the Nasdaq. So we have broken through. Let me delete this line here. Looking at it on a bigger picture timescale, now the Nasdaq certainly still, again, showing more strength than the S&P, as we are almost back to our January highs. Not quite there yet, and the S&P is certainly not there either. But something to keep in mind. Looking at this on the daily, by the way, we had talked about it. If you wanted to use kind of that candle-to-candle style, we definitely had that long lower wick on the daily a couple of days ago, and we've been able to put in higher highs every day. We did have yesterday a bit lower low, so that one would have given us a fair amount of weakness, but still kind of continuing that run higher, and we'll see where it goes from this point. Next, let's talk gold. Crude oil. So in crude yesterday, we didn't really have anything set up for crude. There was really no trade that we'd had preset. I will say that in crude, we are looking at a potential breakdown below one of these areas through here. So our next area kind of below here, I think there's probably a small time frame opportunity somewhere in here. Now, you got to be cautious because this is right around rollover time. But if we slide over to that 15-minute time period, there is going to be a potential for a reversal right through here. So 50 by 59.06. We have that little bit of basing before this strong rally up in price. I'm going to change this to a purple line just to indicate slightly lower degree of probability. I'm also even going to make it a dashed line because it's not quite at that low, at that lowest point where we've got the best odds, but it is a potential reversal point as well. So maybe you wait for price to come in and then get long as it comes back out. Gold. So gold, we'd set up an area right through here, and it wasn't really able to hold through. And we'd set this as a small time frame area. There's a good chance if you got in on this that you may have been stopped out. If nothing else, it's really not running our way. I'm going to take this one off. This one is no longer kind of moving our style. However, it is setting up for potential breakdown from this area. So we could get a breakdown from this 1325 area. If we break down below here, really below 1320 is where you've got a better room for price to run all the way down to 1300. I'm going to leave everything be as it is right now. There's really nothing that I want to add to the charts. Potentially, we could see a reversal if price comes back up in here. I'm just not sure it's going to do that, and I think that we could continue to get a breakdown from these levels. Looking at bonds. So in bonds, what I've been saying for months is, and a friend of mine and I were talking about it yesterday, sell every rally in bonds, right? It's just selling the rallies that show up in bonds because bonds are showing a tremendous amount of weakness. I mean, this is our daily chart in the bond market, and we haven't gotten a rally yet to sell, but the interesting thing to look at on the daily chart is look at all these upper wicks. So all these upper wicks just continue to show additional levels of weakness. Additional levels of weakness in the bonds. And that's stemmed by fears of rising interest rates. I'm going to put a line here for potential breakdown short below 120, but that's stemmed by fears of inflation and rising interest rates. And if as interest rates rise, we expect bond prices to fall. So no real big surprise on that one. The Aussie, we don't have anything set up, imminently that's very, very close. Nothing that is tickling my fancy, if you will. From where price currently is. We definitely broke this little, this short-term uptrend we had in the hourly chart. We had this short-term kind of upward trend through here. There are technical analysts that would call this a rising head and shoulders, and that rising head and shoulders has been broken. I am not one of those technical analysts that would call that a rising head and shoulders, but there are those that would consider this a rising head and shoulders. And in that case, on the breakdown, what you would typically anticipate is a move the distance of the head to the neckline. Let me activate this drawing here. A distance of a move from the head to the neckline on the breakdown, and that would put us right at a potential reversal point. So, while I am not a big believer in this rising neckline, it is something to look at. And maybe if you get a breakdown below here that you decide to take the short and you run that short down into about this 77.5 region. Just something to consider. I don't want to discount anything because there are enough traders that will use that, and enough algorithms that will use the breaking of the trend line, shorting it on the way down for price to kind of come through. The euro. So taking a look at the euro, we'd pulled off our euro short that we had in place up here, and it's still not back to that region or that area. We didn't get as much movement, frankly, as I expected yesterday in the euro. I thought we'd have a little bit more movement, so I'm going to hold off on anything right now and adding to our areas. And then the Canadian dollar, we still have our breakdown short below this area here in play. Last, certainly not least, would be our breakout to the upside in nat gas is still running a bit. Great British Pound. We're coming close to our Great British Pound area. I will tell you I'm a little nervous about it. I'm going to change the settings to a dashed line, and here's why. If this level didn't exist, if this level up here did not exist, then I would put a line right there and call this a breakout long potential. but I can't call this a breakout long potential because if you remember back from our lesson on breakouts, it was room to roam. Well, there's no room to roam if I've got this area just above. So you know what I'm going to do? Nothing. I'm just going to be a little bit more cautious on my entry into the short. Japanese yen. So the Japanese yen is a slightly different picture in that we're getting this setup right through here. So a breakout one way or the other could be a pretty strong and pretty violent move. So with that being said, I'm going to turn this thing off for the day. If you have any questions at all, please send me an email, chuck@iiefinancial.com. Until tomorrow, I will talk to you soon.